All right, all right, all right. What is good? What is good? What is good? You guys should be able to see me and hear me. Right, all right. What is good? What is good? What is good? All right, here we go. So we are officially live for a brand new week. We are in the middle of October now. Time is flying. We're about to step into the holidays. But man, we've had a really good start so far these first couple of weeks to kick off the month. Let me see who's here with me. We got Melvin from New Zealand. What's up? Lisa. What's up? What's up? Hope you guys are doing good. Just want to make sure we get these links sent out to everybody. All right, cool. Perfect, perfect, perfect. I'm doing great. I'm doing great. Thank you. Thank you. Kimberly, what's up? Seb, what's up? All right. Well, one thing real quick is there's no holiday. There we go. I was wondering, like, what is the market like not open right now, or what's going on here? Okay, okay. So I haven't even cleaned up my charts yet. Let's take a look at what we got for a brand new week here. As we step into again the middle of October now, we've had a very eventful October so far. You know, with government shutdowns, we got the Chinese tariffs kicking in again. Um, yeah, basically those two main things have made things pretty interesting for trading lately. No matter what you trade. And for those who are a little bit newer here, we do trade NASDAQ pretty much primarily as far as like day trading wise goes. So that has obviously been a sector that has been affected by all the news as well. But yeah, again, we've had some really good setups over the past couple of weeks. If you are part of the private mentorship program, called Akashex, I know most of you guys that are on here right now probably are from Akashex. For the people that are not yet a part of Akashex, um, we've been catching these Nasdaq moves, all week long, month in, month out, obviously. And yeah, we've been pretty on the ball when it comes to picking out the right trades, the right bias, the right direction, all of that. So we look forward to continuing that as we step into a new week. And yeah, we're right now sitting at a point of interest that does interest me to see price react from. So back on Thursday, we had price have this wick that kind of just like popped up to fill in the rest of some of this fair value gap stuff that was going on from that big drop off that came last Friday the 10th. And so once we kind of tapped into that area, this is an area that me and the students were looking at pretty closely. We saw that perfect rejection from there and we kind of dropped off. Now that we are starting a new week, kind of tapping into that zone, I just see two different scenarios here. Number one is that we react off of this specific zone and drop a little bit lower. Specifically, I think we can fill at least some of these inefficiencies that we see down here. This would be like my first real like focus of a target. Anything past that, we'll see, what the market is willing to do. We're gonna drag this out to here. And we'll drag this out to here. Ooh. All right. Now, this is on a NAS 100 chart, the one that I usually use for Forex trading. Now, for futures, we do have the actual NASDAQ the MNQ or NQ, that had a little bit of a discrepancy against, what we saw on the forex brokers. So we didn't quite fill the fair value gap on the future side of things here, but we did on like the other charts. So you can kind of see what I mean here, where we take this high, we tap into that fair value gap right there, and that's what reacted here. We didn't quite get a fair value gap fill here. So that is the only thing that has me thinking that we could push this high and tap into that finally, and then maybe get a reaction. So usually I would focus on getting a reaction off the zone. I don't know if we'll quite get that. We might just blow past this previous high here. So personally, I'm gonna personally assume that we're gonna actually respect that, or not respect that zone. We should probably break through this high. So I expect price to push that high. If we can push that high before any drop off, then I'd be looking for sells very aggressively above this high. So that's what I want to see personally right now. I want to see price kind of tap into, this inefficiency that we had from a while ago, taking out the liquidity from this old high, and then basically dropping off to fill some of the inefficiencies from here. And then from there, we can kind of see what price wants to do. But all in all, that's kind of like the MO for me. Again, on the opposite side of liquidity, we had this low. Price basically came and ran that low here, and then we've basically shot up since. So I think, usually when we grab one side of liquidity, the other side is what's coming next. So again, we could end up respecting this last, supply zone here and potentially reacting from that. But I'm personally not going to play that. I'm going to allow to see, hopefully, if this pops up above. And then from there, we get a drop off. That's more of the play I'm trying to get into. Because we have the liquidity grab. We have a fair value gap tap that we have in there. And yeah, basically, new week open gap plus the inefficiencies from Friday. That's the stuff that I'm seeing right now. Just initial thoughts looking at NASDAQ. So... And again, we always could come down to these inefficiencies down here that were kind of left behind as well, as like a longer term target. But, we'll see if price is willing to go that low. If we could sell, let's say, from this area with a 50-point stop, yeah, that would be a crazy risk to reward. Okay. So something else that we've noted, I do teach through Akashex that I usually fluctuate between a couple of different size stop losses typically when I trade my strategy. Last couple months we started really focusing more on 30-point stop losses. However, these market conditions, as we could see, 30 points throughout all of this week just looks very small. It looks very small. And that's because literally every single day we've had a much bigger or a much wider range of price action. I mean, Asian range has been printing like 150 points when it usually does like 100 or less for sure. Even this day was about 110 points. This one was about same thing. Like we're having pretty wide ranges. Let me make sure this is correct. I knew something was off. Okay, that's a little bit better. But yeah, from 697 to 558, yeah, it's about 140 points. So we've had a much more aggressive market this entire past week since we had this big dump off from the tariff news. So volatility of like all of these days compared to some of these days, you could tell the difference, right? Like look at this whole week of price action right here compared to this whole week of price action. This is how you have to kind of react and adapt to what is going on in the markets. We have static systems or like mechanical systems when it comes to like stop losses and stuff like that for my strategy that I teach. However, I do keep in mind like what is the volatility looking like this week compared to other weeks. So like for example, again, if we look at this whole week right here of price, right? You're talking about multiple days, 1, 2, 3, 4, 5 days where we had like a maximum low to a maximum high of about 360 points, right? That's like 5 whole days. Like the highest and lowest point was about 360 points. All right. And then this week, the low and high of that entire range was basically from down here all the way up here was a range of about 812 points. 812 points compared to 360. So more than double. More than double was the size of the ranges that we saw all of last week compared to this week. And what was the catalyst? What was it that caused it? It was this massive shift from the tariff news that came with China. We saw all this in one single day, which kick-started, all of that volatility and volume. So very important to notice the difference between normal weeks and not normal weeks. And so this doesn't necessarily equate to danger. There's actually a lot of opportunity with bigger moves, but it just comes with adjusting the way you look at your position sizing and your risk, as far as like how many contracts you're trading, what lot sizes you're using, because again, like for me, adjusting to like using 50 point, 80 point, 100 point stop losses compared to me sticking to 30, max 50, you'd say, why would we up the stop loss so much? Well, we're still squeezing the same R multiples. We're still getting setups that are running for over 2R, 3R, 4R, even with a stop loss that is adjusted to be like double the size. And that's the thing for me. Like, I want to be able to like catch the moves and squeeze double, triple, or more of my risk when we're jumping into ideas following my, entry models. But I don't need to necessarily go for a 10 to 1 or a 20 to 1. That's something that I talked about last week on the live sessions is if volatility is up, then if we keep same stop loss size means more R multiples, which means more money, right? So if you keep the position sizing the same, you can squeeze a lot more, reward based off the same risk because we got more volatility. However, if volatility is up, we also can see more stop losses get hit because they are not enough to hold the swings. Okay. So for me personally, I was willing to up the stop loss size so that we wouldn't necessarily squeeze more R multiples or make more money, but we would also not be increasing the stop losses getting hit. So that was the way I handled it. Again, if you keep everything static, then you'll take more losses, but you'll also have much bigger wins if you want to play it that way. But yeah, I was cool with increasing my stop loss size. Now, heading into this week, we don't really know. Like, we don't know if this week is going to continue or revert back to normal, quote unquote, normal conditions or not. I'm going to assume things are not normal until they show me they're normal first. Like, our most recent evidence is an entire week of heavy volatility. So until we get a day, a couple days at least of quote unquote normal conditions, I'm gonna assume it's still very volatile because the conversations and everything are still relatively fresh. So yeah, I will expect things to still be a little bit heavier. So again, my MO right now personally is I want to see price, continue to go sweep this high that we left from Thursday. And once we grab that liquidity from Thursday and we see a rejection off this, fair value gap area, I want to see price basically start to, at least work its way up or work its way back down to rebalance some of this extension. If we get like a halt in price, like let's say here, then, if we pull up extensions from the bottom here to where price, stops out here. So from here to wherever price stops, let's say it's here. I think we can get to, at least half the move, 60% of the move. So even there, like that's really good trades as far as our multiples. If we use a 50-point stop, that's over a 7-to-1. Even if I adjust that to be like 100 points, again, to account for volatility and those things, this is still pushing for 3.5-to-1. It doesn't even have to be necessarily 100 points. It could be like 80 points, 70 points. Just something that gives us a little bit more room to work with and still have a good risk to reward ratio. I think that's kind of like what I want to see. So let me check the chat. Haven't checked what you guys have written yet in a while, so see what's up here. Got Benjamin, Peter. Which data is more accurate? Do we have to pay for futures data on TradingView? No. Well, if you want like real, like up, like to the second real-time data, yes, you do have to pay for futures data. Um, Usually it's like through a trade of eight or whatever you're using, but on TradingView you can just look up, like MNQ. The real market is actually like the futures market, because the thing is when you trade futures, there's one price. When you're trading on forex brokers, these are just synthetic markets that are used to mirror what the actual like futures contracts are doing. So the real price, quote unquote, is the one that you see here on futures, right? But at the end of the day, it doesn't really matter. It matters like where you're trading. If you're trading a prop firm in the CFD space like TradeX, you gotta go off of TradeX's prices. At the end of the day, your execution platform doesn't even care what futures is doing when it comes time to open close your trades, right? So you gotta go off what you're using, you know. But if we want to be technical, then yeah, obviously looking at Nasdaq through the future side is like the quote unquote real price. Um, so just keep that in mind. But if you trade like futures prop firms, they always give you the data like included. So whether you use like Apex or Take Profit or Alpha, like it doesn't matter. Like all of them, they give you the data. Some of them you can trade on TradingView directly. Some of them like Top Step, they have like their own in-house platform. But yeah, it just depends how you trade. Bigger stop next week. Yeah, I mean, I've been using bigger stops for about a week and a half. So Netflix earnings coming out. Do you think that will have an impact? Yeah. Yeah, I mean, I mean, for me, like the only ones that really make the biggest dent when you look at NAS moving during earnings is like Nvidia and Apple, but mostly Nvidia. Because Nvidia is the biggest company. So, Nvidia is it moves big time. I think, when was the Nvidia report? It was like August something. Was it here? No. Was it this day? It was this day. Yeah. I can just see it on a chart right away because it does something so like weird and ugly that it never does, which is this candle right here. That entire like huge spike that we saw there, that was the Nvidia earnings right there. I believe that was like, yeah, 27th. This is at 4 p.m. So Nvidia, yes, that's the one that I would definitely pay attention to. Maybe Apple as well, but mainly Nvidia. As long as they're the big dogs, that's how it's gonna be. And they are definitely the big dogs. Um, so yeah, I mean that's pretty simple as far as like what to expect so far for Nasdaq. As far as cryptos, Bitcoin's been stabilizing a little bit after a bit of a drop off. Personally, I still think that we are due to push below like 85. I think we have this very clear inefficiency right here, this flat bottom um, right here. I believe that we should at least get to 85. So we'll see. We've already kind of had like a little bit of an early sign of like liquidity sweeping here. Personally, I really welcome it because I want to be able to position myself into altcoins, and I need Bitcoin to drop. So, like for example, XRP to $1. I've been saying that over and over and over for a while now. That hasn't changed. So I will still be waiting for this massive inefficiency on XRP to fill. I have zero doubt that it will. Just because I don't know, I've used inefficiencies on the higher time frames to always scale into crypto positions that I believe in, especially like main coins like XRP, forever, you know. I just feel like I have evidence for it, whether it's Bitcoin, ETH, Solana. So $1 XRP, I will, love to load up on that there. ETH, I'm like whatever about ETH personally, but I see a world where we can come down below 870 again. I think we can push below 800 at some point again on ETH. Just we have a lot of inefficiencies. So like, all these fair value gaps that we see down here on the higher time frames, like the monthly, the 3 month, all of these I do expect at some point for price to rebalance here. And that's not a lot to ask for if you look at the grand scheme of price. It's just some people are so married to the crypto that they're having that they don't want to hear that stuff, and that's fine. But like even Solana, monthly time frames, you can see massive inefficiencies on the monthly time frames for Solana. So I would be very interested in Solana coming back down to $37. Again, from 200 something to here $30, it seems like for some people it's like unrealistic, but it's like, dude, we've literally gone from 260 to $8 before. Like we've already had historical evidence of going from 260 to 8. And people can say, yeah, but things are different now. I understand, I do believe in Solana. I just feel like this type of price action here, like somebody's gotta get liquidated soon. Like somebody's gotta get kicked out. So they're gonna sink price at the right time, below 40 for Solana, and below 40, definitely the move. Because from 40 back up to 200 is already like a 5x plus, which is a pretty decent, flip. So I definitely love a $40 Solana. I like seeing Bitcoin going under 80, XRP to $1. Those are the main ones I definitely look to play off of. And don't be surprised, like XRP can even come down to like less than $1, But at least $1 is what I want to see. My other thing I had Peloton stock. since $3.50. Still, that's a long-term play, like I mentioned to people when I first called this out. Um, Still looking to ride that all the way up to like $50 a share. You know, if I can get from $3 to $50, that's a really nice return from 3 to 50. So I want to see that happen for Peloton. Yeah, it's kind of like my other stuff as far as like investments and alternate markets, I guess you could call it. So that is the bulk of it. Okay. I've seen a pretty strong rejection already here. So yeah, we'll see how this continues to play out here. Um, well, keep in mind, guys, if you are in Akashics, we have our first actual live stream tomorrow in Spanish at 11 a.m. Eastern, and then we have Tuesday, Wednesday, Thursdays in English at 10 a.m. Eastern. And then we'll look to see what type of actual trades we can maybe catch together on the session, go over some, very detailed stuff when it comes to the strategy and what we do. But until then, like I'm gonna just pretty much keep an eye on Nasdaq again, pushing above these highs here from Thursday to eventually have that drop off, and we'll keep it going. For those that didn't know, we had a boot camp that we ran about 3 weeks ago, about a week, almost a month ago. Damn, time flies. And we made this chat here. And basically, we got about 365 people tapped into that now. We've already seen some people get funded. They have payouts pending, a lot of cool stuff on the testimonials that you can see here. We don't even have all the testimonials posted here just yet. So we'll continue to update this, but I have everything like tracked week in and week out as far as like, what are the results that we're producing from that chat every single week. And we're gonna keep running this chat basically until December, like the end of December, so heading into 2026. Once 2026 wraps, or once 2025 wraps up and we step into the new year, then that's when I personally would like to run another boot camp with a couple other traders, and just kind of kickstart a brand new wave from January to March. So every quarter, I want to try to run a boot camp with some of the squad from Akashics, and just kind of keep everybody thinking in terms of like goal setting, tracking, accountability, focus, all of that. Because I think what happens honestly is like sometimes like we just kind of like go through the motions, especially if things are not necessarily going our way, or if we feel like maybe we're not making progress. A lot of it just comes to giving yourself structure, making sure you track things, making sure you set new goals, milestones. You just have clear intention and what you're trying to do, and not kind of fall into that lull of just like going through the motions, taking another trade, jumping in another day, and then time just flies and flies and flies, and then you kind of have to ask yourself like, am I making progress? Am I learning? Am I like changing? Am I picking up on who I am and what I'm good at, what I'm not good at? Just being very like mentally there, like present and aware of the process. That's a super big thing. So yeah, that's why I like these boot camps, to kind of re kickstart the energy and just kind of get everybody like focused up and intentional. And again, we've already seen some people, produce results from that, so that's beautiful to see, of course. But yeah, man, that is kind of what we got going on. Obviously, we're stepping into holidays soon, when it comes to like November, December. Uh, Personally, with my strategy and the way we do things, we're still going to be able to run it up. Personally, I think that there's certain strategies or certain ways of trading that are not ideal for like the end of the year. Like markets are not the same. December in a certain regard, as things are like winding down, people are on vacations, this and that, holidays. But I mean, again, for the last like year or two, I've kind of paid attention a lot from a day trading perspective, and I don't feel like that much of a difference. The only week that's very like affected, obviously, is literally like the 25th through the 1st. Like that exact last week of the year. A lot of holidays, a lot of stuff in between, so that makes more sense that it kind of is cutting in and out, and it's very weird. But I mean, the first 3 weeks of December, trading my strategy, like it shouldn't be an issue. It should be able to keep doing things as normal. But I'm already thinking of all that like starting now because we'll blink and it's gonna be like mid-November heading into Thanksgiving. And then next thing you know, 2026 is here, Like it really is going to creep up on us very fast. Uh, which is why we gotta again like have some intention to end the year strong and set the tone for 2026. Because the reality is whenever we have like that breakthrough idea or like decision that you make in your head to like focus or change or improve or whatever, like you can make that decision today and then that'll start to reveal the fruits of it over the next 90 days. Which is why like if you want to step into the new year like on a roll, it actually has to happen right now. Because if you make the decision to be like locked in and really like change and do what you got to do to win today, it's not gonna happen on Monday or Wednesday or next week. It's gonna take you a month, 2 months, 3 months for that to start compounding and showing you like, okay, it's paying off to focus. It's paying off to, sacrifice whatever you gotta sacrifice, cut off what you gotta cut off, whatever. Um, so yeah, these next 3 months will be a test of like what your mind's on. At the end of the day, it could be very like around family or travel or this or holidays or whatever. And I mean, I want you to enjoy that. I'm gonna enjoy my holidays. But just be mindful, have intention, and blockade your time to just still be able to put in the work you got to put in to be able to start the next year on the right foot. Because if you don't start thinking that way like already, then you're gonna start thinking that way January 2nd, January 5th, and then you start focusing, and then by March or April, maybe you start seeing something. Like that's literally I've noticed like how life works. Like whenever you decide to like make good decisions, then in the next 3 to 6 months it starts to show. So if you want to start next year hot, you already got to start getting hot like right now, if that makes sense. So yeah, that's why we wanted to do that boot camp kind of like heading into the last quarter of the year. So that way I don't expect the craziest stuff in the world to happen from now to December. Even though we've already seen payouts, we've already seen people passing their prop firms, and that's amazing. I expected more heading into like December and January because it'll have given like a month or two of you being on the boot camp, taking notes, applying it, noticing things, whatever, to start kicking in and showing, you know. So yeah, that's that. Uh, but yeah, if you guys have any specific questions before we get up out of here, you guys can let me know. But Sunday market outlooks are pretty chill, pretty straightforward. I just want to give you guys my thought process on what I'm seeing to start the week, just so that we can kind of not feel lost on the chart, not feel like we don't see what's going on. Obviously, my window of Asia developing has not even started yet. It'll start in about 23 minutes where we'll start getting, these highlighted gray zones. And those are kind of like the premise for my trades. So once we have Asia formed from 7 to 1 a.m. Eastern, then we will have an idea of whether we'll focus on buys, if we'll focus on sells. But for the most part, ideally, even tied in with my strategy, I'd want to see price, form an Asian range, maybe something like this. And basically push out of it and then maybe reverse and come back down, something like this. Okay, so wait for the price to pop up, come back into the range and go for sells. That's kind of like already how I'm visualizing a potential scenario here. So we will see. How long do you think it'll take to master your strategy? Um, well, here's the thing, like you can master something, you can master something like super quickly, but you have to make a decision. Like it really just comes down to making a decision because once you make a decision, then you start to really just practice, and once you practice, you start getting better instantly. But the problem is that like people when they wonder how long it's gonna take them to get better at this or better at that, it's because they're just like they have uncertainty. Like you don't actually you haven't made a choice yet. Like until you actually decide that okay, this is what I'm gonna do, then you're still going through the phase of discovery. So like for example, if you're somebody now look, if you're in a Akashics and you're like taking trades from me and you're taking trades from this person and that person and this person, like I want to let you know there's people that do that and make money, right? Because they're just very like they're very like militant when it comes to their risk management and they just focus on copying other people. And so you can make money doing that, but like when I have conversations with people on live sessions or here or in the chats, like if you're having conversations with me, I assume you want to be a good trader. Like you want to become a good trader. Like you want to be able to do it without needing to copy somebody else, if that makes sense. So for the people that corresponds to, and it might be you, um, if you're still copying people only and like you're looking at like three or four different people, you haven't even begun the process of like actually becoming a good trader because you're still exploring. And that's fine. I'm not saying like you're wasting time or that you're not doing something productive by doing that. But what I'm saying is like if your goal is to become a really good driver, you kind of need to like know like for example, everybody that's like a F1 Formula car racer or like a NASCAR racer, like they can't actually practice on becoming a really good racer until they know what car they're going to use. So it's like you're kind of like shopping around to see what vehicle you're going to drive. Are you going to drive this like Ferrari? Are you going to drive Porsche, Lamborghini, this, that, whatever? So you can learn a lot about different cars, but until you pick a car and then drive that and know how that car drives blindfolded, you haven't really become the process of being really good at driving. So like when people are following other people, you're like in the passenger seat of the car going for a test drive. And then people go on test drives with like five different cars, five different people for like 5 years. And then you ask them to like look for setups and you can't really do it consistently because one day you're like thinking about this strategy and then this asset and then this way of trading and then you just never have like a concrete base of like what you believe in, what you do and what you stick to. So once you decide, I feel like you can learn it really fast. I'm not gonna put a timetable because people learn at different speeds, and then people also have different levels of work ethic. There's people that are gonna sit and like hammer down a strategy for like hours a day, for weeks in a row, nonstop. I'm not saying you have to do that, but I mean, let's just be honest. People that spend more time and more focus on something are gonna put in you're probably gonna learn it faster if you put in more time and more energy and more effort. Um, so at the end of the day, you set the timetable for yourself, you know? But ultimately for me, Like you can jump strategy to strategy or this to that, and you can actually see some results, but the one thing you'll probably lack more than anything is consistency. Because you might have like a really good week or a really good couple weeks, and then you just like throw it away the next week, and then you're like, oh, I don't know if this strategy works out for me long term, or I liked it for a little bit, but now that I've traded it for a while, like I don't know if it's for me, blah blah blah. Like people do this stuff all the time. So all I could really say is like, for me, I just realized, okay, these are the questions I ask myself, and these are the questions you should ask yourself. Okay, when am I trading? You gotta know because some people have a job, some people have different schedules. Depending on the schedule that you have and when you're able to trade, that's what is gonna dictate what you trade. So when am I trading? For me, I'm trading New York session. The reason why is because I don't want to trade really late at night here in Miami. Like the last thing I want to do is put money at risk and have to be super focused and stressed out in the middle of the night when I don't have that lifestyle personally. Like my sleep schedule, my life schedule is just not meant for me to trade London session, for example. You might live on the other side of the world in Europe where New York or London session is in the morning, so this is a different conversation. So you gotta know like when you're trading. The other thing is like um what's it called? Um Honestly, the when I'm trading thing is such a big one. And the other thing is like your personality. Like are you somebody that likes to trade fast, trade slow? Like what's your style? For me, like I don't like to be scalping. I don't like to be in and out of trades in like a minute. Like I feel like that type of like that type of environment doesn't suit me. So personally, like I like to take trades where like you guys will see it takes maybe at least 15 minutes, 30 minutes, an hour, a couple hours for my trade to like fully play out. So that's why my strategy has the stop loss size that it has and all these things. So you just gotta assess like these type of things because if you like to trade London, you might stick to trading forex pairs like GBP or Euro, especially if you like trading slower markets. If you like trading gold, like gold right now is very active, very volatile. I just like indices because I know that at 9:30 a.m. the market opens for the stock market and that's when things click. So I don't even gotta really worry about trying to take trades before 9:30. It allows me to sleep, wake up, eat breakfast, do whatever I want to do, and then I know at 9:30, boom, I can get ready and start trading. So I like having that structure. I like knowing when I'm gonna trade, and then I like having my strategy to where like, I don't need to micro scalp it. I can just wait for my exact confirmations, take it, and I know that, the trade's gonna take a little bit to play out, and that's what fits me. So you just gotta assess those things. Spent the whole week learning supply and demand zones, imbalances, created my strategy, back tested, and everything finally clicked. Teaching it to test this, putting it to the test this week. Yeah, I mean, if you what I'll tell you is like when I created my like I didn't really create my strategy, I guess you could say. I just put together things that I learned from other people. Like I learned, supply and demand from a bunch of different people over the years. Um, I started really paying attention to like session liquidity like 2, 3 years ago, and that's when I started incorporating it into indices, and that's where like I got very systematic with the way I traded because like when I first started educating for Akashics and everything, I was trading, forex pairs and gold and indices. Like I was trading a bunch of different things, and I was really looking at letting like the higher time frames kind of hit certain zones, and then I'd focus on that pair instead of another pair. But now, like I just literally cut out everything except one pair, one session, one strategy. And so what it allowed me to do was become very like intimately involved in the details of what makes NASDAQ move, when, how, and I mean usually that's why my directional bias is pretty spot on and I can kind of see things coming before they come. Not always, obviously I lose or whatever sometimes, but for the most part I feel like I have a pretty good pulse on how to squeeze money out of NASDAQ just because it's my focus. It's my only focus. So that's the approach for some people. I also know some people that do rotate like 10 plus different pairs, but it's because they're waiting for a higher time frame thing to happen, whether it's a liquidity grab, some type of fair value gap. Like people I know that will wait for like fair value gaps or like liquidity grabs on the higher time frames, like 4 hour or the daily, across like a bunch of different currencies or a bunch of different things, and then they'll have alerts. And so once that alert hits, then they start going in there and they look for setups on that specific pair or whatever. So that's a style, but at the end of the day, it's whatever makes money, man. Like it's really that simple. Like if you jump into a trade, you got to risk a certain amount to make hopefully at minimum that much or double, triple or more of that. For me, I always try to make anywhere from 2 to 4 times my risk as much as possible per trade. If it's less than 2 times my risk, at least from a projection standpoint, I don't think the trade's worth taking. Sometimes we close 1 to 1s or less than 2 to 1s by a little bit because of the way price has reacted or something that happens along the way. But at minimum, the projected, risk to rewards for me have to be like making sense for me to want to take a trade. Um, and like that's what I did with when I was, putting together Liberty. I just wanted a system that was duplicatable and consistent. I knew that every single day, Monday through Friday, we were gonna have, an Asia high and an Asia low. Every single day, Monday through Friday. So if I can just learn the relationship of NASDAQ with Asia, then I know that every single day, Monday through Friday. It may not be the ideal trade to take. It may not even be that I trade every day, but there's something on the table every day. Because every day there's going to be some type of interaction in and out of Asia. You know, it's just the way it is. Um, so yeah, that's all I do. And, when you back test and when you like gather data or whatever, you can start to get a little bit excited about stuff. All I'm gonna say is like you have to just actually trade it. Like there's nothing like actually trading your strategy for months minimum. Like you got to have a strategy that you've back tested that you believe should work well, and then you got to actually execute it in real time over and over and over, and actually that's forward testing, like actually having the pressure of executing in the moment, actually having money on the line, and actually trusting it over a large series of trades. So we've been doing Liberty now for, I think it's been about probably like a year and a half or two. Like we're pushing 2 years, I think. Maybe a year and a half. So, I say that because like in a year and a half, if I would have encountered my strategy quote unquote not working anymore or something along those lines, I would have found out by now. But nah, man, like the number one thing that I had to learn with my strategy was just adjusting to volatility. That's really the only thing, because like I mentioned at the beginning of this, we have weeks where we have more like, it's like price action that's not so aggressive versus another week where price is much more aggressive. And so, stop loss size here and stop loss size there are the only thing we got to tweak. But the entry criteria and the relationship of Asia to New York and things like fair value gaps and supply and demand and liquidity and all that stuff still absolutely play a role. You can see fake out above the high, tapping into a fair value gap, drops. Where does it drop to? It drops to this low where we take liquidity, and now price is shooting up again. Where do I expect it to go? To take liquidity again. So I'm always looking at liquidity, fair value gaps, and then fitting all that into my method. So, but yeah, that's enough yapping for today. I think we kind of covered what we needed to for sure. But yeah, man, we're gonna go ahead and get up out of here. Again, I'll see you guys tomorrow. If you're in the Spanish community, we're gonna do 11 a.m. Eastern, and then Tuesday, Wednesday, Thursday in English, we will run these back up. So yeah, I wish you guys a very successful week in the markets and in life period, and I'll see you guys on the sessions. With that said, guys, hope you have an amazing rest of your Sunday night. Especially if you're in Europe, it's probably really late over there. And yeah, we'll take it from there, y'all. Much love. Let's get it. Appreciate